I will show you about MTSC symbol. Just copy that and paste that in Google and write stock besides it. And you can see the firm name, and you can see that somebody buys stock right now, they'll be paying 55.56 US dollars and per stock. And you can see the market cap is in millions, and which means it's a nearly billion firm, and it's a good size firm. You can see the dividend yield is 2.16%. If the dividend yield is if some company is paying a dividend, that's a positive sign, which means that after paying their loans, liabilities, costs, and everything, they still have extra money left. That money they pay out as dividend to shareholders. So it means that the company is doing financially very good, that they still have extra money left after paying all their costs. So that is paid as dividend. This is brilliant. So you know that's a brilliant thing. So it means it's financially strong. Let's look at when was this founded. I'll just go to Wikipedia, and I can see a box inside there which is very helpful. You can go through it yourself. I'll go to founded 1966, and I'll go back now. I will just copy the exact name from Google, and I want to see what the employees have to say about it. I will just type in Indeed reviews, and I can see here that it has 62 reviews and 3.3 star, which means that it's above average. And 62 reviews is not plenty, but still it is quite a lot. And you can just go through the reviews yourself to see what the employees have to say, and then you just go to Glassdoor and check the reviews, because it's a brilliant website as well. And you see 152 reviews, it's more than in Indeed. So it's like nearly 150 reviews, and it's 2.8 star. It's above average. You can just go through yourself about the reviews. And I'll go to Justia Patents. In Justia Patents you can see the patents of this firm, if it has any. So I'm not looking at inventor, because those are people who have invented that, but they don't own the full rights. I'm looking at applicant or assignee only, because those are people who have the full rights of the patents. So it has patent in 2013, 2012, 2013, 13, and so on. So I'm also interested in recent patents, if they have any patents in 15, 16, 17, 18, 19, because that means they're still innovating, they're still thriving, they're still making a competitive edge. And just go through the list yourself, and you can just see that, if they're doing it recently, 2016, and so on. So that would tell me that patents are very important, because it gives competitive edge, it acts as a moat, and it makes you different in the market than your competitors. And so it's brilliant. So the more patents a company has, better. Let's look at Yahoo Finance, and I want to look at the key executives. um, okay, I'll just paste that there, and that's it. Profile. And you can see technology, you can see industry, and full-time employees. You can see there are 5 executives. You can see all their salaries have been shown, which means that it builds trust. It has all the information. The more information a company has, better. And I just want to go to macro trend, and you can see price ratio and price book ratio, and I'll just paste in the company. And it takes time to load, because it has a lot of data. So you just have to be patient about it. So I'm looking at price book ratio. If it's less than 1, that means the stock is at discount. It's bargain, you can buy it cheaply. If it's 1, that means that the stock you're buying it for the real price. It's not expensive, but it's real price, which is good because at least it's not expensive. If it's more than 1, that means it's expensive. The higher the number goes, the more expensive it gets. Right now, it's 2.06. It means it's the stock. If somebody buys the stock right now, they will be paying twice the price. They'll be paying it twice the price of the stock. It's 2 times more expensive. But if somebody bought it in 2015 March, they paid 4 times the amount, 4 times money. So you can see just right vertically up, the price they paid in 2015 March was $69 to buy something that was only $16 worth. So they paid a lot of money. They paid 4 times more money. Right now, they will be paying twice more money, 2 times more money. So it's cheaper than in 2015, but still it's like twice more expensive. So you need to be careful. But it was the most cheap in 2009 when it was 1.35 times more expensive. You can just see vertically up, you can see that people who bought in 2009 June, they paid $16 to buy something that was $12 worth. So it's a little bit more expensive, but still it is expensive. But right now it's twice more expensive, so you need to make sure that you want to wait about it, or you want to wait to ratio to come down, or you want to buy right now. You need to judge that. Let's look at other ratios. Let's look at current ratio. So it just takes a little bit time to load. We are looking for, if the ratio is less than 1, then the stock is very risky. If the ratio is 1.5 or more than that, that means that the stock is very safe. Let's look at it. I'm looking for 1.5 or more than that. It is more than 1.5, which means its stock is safe. Let's look at the previous trends. I want to see if it has ever become less than 1.5. This is what I'm looking for. So we have data since 2005 up to now. It has never become less than 1.5. So it has thoroughly, since 14 years consistently, it has been a safe stock, which is brilliant. Let's look at debt equity. Debt equity, we are looking for zero point 0.5 or less than that only. So let's see. Let it load. I'm looking for zero point 0.5 less than that. It is zero point 0.9. It's a lot more than zero point 0.5. It's not safe. It's more than zero point 0.5. Not safe. Not safe. So, I would say, from 2005 until 2016 June, it has been a safe stock. But from 2016 September up till now, so recently, uh, recent 3 years, it has been a very risky stock in terms of debt equity. It has taken a lot of debt, and it's more than zero point 0.5. It should be zero point 0.5 or less than that. So since 3 years, it's very risky. Recent 3 years. Let's look at return on equity. I'm looking for 8% or more than that. So yeah, it is eight more than 8%, which is brilliant. Let's look at the previous trends. That if yes, it has been in 2016 and 17, partly like for a year, I would say, it has been below 8%, and then it has been above 8% consistently. Yes, yes, yes. So then for like few months, yes, again below, and then so majority, I would say we have data since 2005. So just like for few months in between, it gets below 8%, but still it's positive one, and mainly it's above 8%. So I wouldn't mind that maybe. I think it's brilliant. So